Hello and welcome back to the Retire While You Work podcast. My name is Carson, a wealth advisor here at Adams Wealth Partner, joined by Jeri Anne, our Director of Operations, David Adams, our founder and CEO. And our guest for today is Megan Baker Jernigan, a wonderful and very popular real estate agent here in Nashville, Tennessee. Meg, thanks for joining us.
Thanks for having me, guys.
Very popular. Wow, man.
No, I got the
Slide
intro.
in comments.
Kind of a big deal, right?
Yeah.
Kind of a big deal.
Carson can follow me home and introduce me as I walk through my door.
Right. And also, if you're not watching video right now, you're just hearing this. Jeri Anne and Megan have the same stripes going on, same shirt.
Just gal.
We do. We planned it.
We did. Stylish gals.
Cool. Glad to have you here. Tell us a little bit about yourself, how you got in real estate and why you're so popular, all those things.
Popularity contest, enter in. I started real estate 11 years ago. I started out more in the corporate world, worked at TVA and then Vanderbilt Children's Hospital in more support roles, project coordination, project management roles, and just wanted something challenging that I could control, if that makes sense. So I guess the riskiest thing I could do was go to work for myself. And then that's what I did. So got my license 11 years ago and left Vanderbilt Children's and was solo for a little bit, joined a team for a little bit, started my own team, and I've had my own team for 8 years now.
Awesome.
Wow, that's great.
Is the number one thing, let's just go into the heavy hitter question. What's been one of the biggest lessons you've learned being in business by yourself or making that jump into going out on your own?
Sure. That you have to treat it like a company, and that is exhausting, and that 80% of the things are not what you actually signed up to do. So the admin tasks, the boss, the 401ks you have to set up, just all of the admin that you have to do as a business owner, that all I thought I was doing was going to facilitate and advise on home sales. So
that's the accidental CEO, and I can relate. When I was just
I am the accidental
to advise clients and do financial plans, and then now I have a team of 13 people, and you're running a real company, as you said. So yeah, I can relate.
That is exactly the surprise. Joke's on us. Just kidding. It's been great.
The easiest part, like for me, I'm curious what you think. The easiest part for me is sitting down with a client or new client and doing the essence of what we do. The hardest part is all the other stuff.
Yes.
That's exactly team staffing and all that. Not Jeri Anne and Carson, of course, but everybody else.
Of course.
Yes, sir.
The other 11. Don't let them watch this episode.
They are terrible. Just kidding. No, they're all great. You know what I mean? The process to build a team and a culture. And it's not really what you did when you were just starting off in real estate on your own, or I started off in financial advising. It's just the client. So
selling homes and buying homes is the easiest part of my day. Absolutely. Every day. Yes.
And that well, what just kind of a like broad overview of what you're seeing in the Nashville market. Let's just start there. Like, is it finally, 5 years ago during COVID? I mean, we were kind of, one of the popular cities that was, prices were doubling, and just I saw houses where it was, they were listing for 1.8. The house ended up selling for 2.1, and then it was like some of them were sight unseen, and you had to like get in line to show and no inspections. Are we back now to a normal market, a buyer's market even? Like, what's happening?
So it's a convoluted question with a complex answer, but I will quickly simplify it. It depends on the kind of home and the kind of product that you have. So there are some homes that are still selling multiple offers in 3 days. And those are homes that have a unique and special characteristic, and not to the seller, right? Every seller thinks their home is the most special home on the market. But like, if you live in a neighborhood, a PUD, if you have an HOA, if your home is a 5-bed, 4-bath that sits on a half an acre, there are 900 options for you. And you're going to have to really competitively market, prep, and price your home. If you have a really unique property, if you have something with interesting acreage, or it has a mother-in-law outbuilding, or a finished barn, or has a car barn in Leaper's Fork, or has a horse arena, if you have some kind of unique quality that is not often seen, you still have to be priced well. You still have to prep it for the market, but you're going to get a lot more excitement and a lot more attention. And that's where I've seen waivers of appraisals, as is inspections, and things like that.
Is it because oversupply and or interest rates and people just aren't moving and people have stopped moving here post COVID? Like we know there's a lot of those houses on the market that aren't unique, but why are they not moving?
So a lot of factors. I think you hit two of them. I think the third one, and the Nashville Chamber puts out an economic update every quarter. I'm sure you guys watch it, but our wages just aren't growing with our housing prices and with our cost of living. And we actually have one of the most expensive cities to live in, not just because of our houses, but our childcare, our transportation, just the cost the money it takes to live here is higher than it is in a cost of living in New York City. So they rate cities based on 100 is the goal of like everybody makes what they can spend. And so the closer to 100 you are, but under, the more affordable you are. So if like Nebraska's 40, it's like, oh, they're really affordable. We are at a 103.
Nebraska, if you make $100,000 is 40, like you're going to be living very comfortably. But if it's like 100, okay. So what is Nashville?
And what were we? Did you say?
Nashville is a 103.
Yeah.
Wow.
So we are super unaffordable to live.
It's very believable. Very
My
believable.
kids all want to buy houses, and I'm like, I don't know if you can buy one here.
This house is big, like this. Like if you and I, if the four of us were to go to lunch across the street, I won't name a name, like these nice restaurants, and of course we're in 12 South, but this is all of Nashville. Lunch is $200. Lunch.
Oh yeah.
Each get a salad. We get one appetizer, some teas, whatever. Not even alcohol. $200.
Yes, you guys know we have a babysitter every Thursday, and our babysitter alone is $150. Just the babysitter. So you tack that on to a date night, and you haven't even left the house, right? And because babysitters in Nashville,
$500.
No, they're $25 to $30 an hour. So when
time you do 150 there, and then a nice dinner, you could spend $400 or $500 for a date night on a Thursday.
Yes. So I just think that the entire city just becomes that way. I also, I won't get into too much economics, but I am, semi-passionate about this. But I think people are still like just struggling with money, and they're emptying their savings account. I don't know if you guys are seeing this on the wealth side with the type of clients that you have, but people are really spending a lot of money still, whether it's on vacations. They haven't pulled back based on the economy. They're still kind of spending like it's 21, and it's not. And so a lot of people are depleting their savings account. So where I'm seeing kind of two types of purchases right now, you are either full cash or you are putting 5% down. And there's really not a lot of variance in that. And I think that's really telling of our economy. You are doing really well, or you are really having to watch what you're doing,
It's a $10 million unique property in Sport, that buyer's paying $10 million cash. If it's a $1.2 million house in wherever, 4-bedroom, 4-bath, $1.2 million, that buyer's putting $75,000 down.
Yes, they are putting 10% down based on metrics right now. Yep.
Look back to like the COVID era and just how, I guess, expanded lifestyles for a lot of people got from the era of free money, like you said. So then you have this lifestyle expectancy for yourself and what you should be spending your money on. And then all of a sudden we get into harder times, and it's difficult to pull back maybe those extras, like you said, and people don't want to give up those extras. There's like a housing affordability index, which essentially takes into account home prices, median wages, and interest rates to factor in what a mortgage would be. And we're pretty much just at the top range of what that has ever been. It's just so unaffordable to buy a house for your average Joe.
Have you seen the rental rates though? The rental rates are the same. Typically, like if housing prices are high,
rental rates are down.
Yes. And if rental rates are high, housing prices. And right now they're both just high. And so that I think contributes even more. You're just spending. What were you going to say, Jeri?
No, I was just going to say, have you noticed, I know David mentioned it, but have you noticed that it's slowing down on people moving here?
I think our numbers in the chamber have said that there are. So back in the heyday, I think it was like 120 people a day was the stat, and now it's down to 70 or 80 a day.
Still a lot, I would think.
It's still a lot, right?
But people coming here are not getting the wages they need to buy what they think they're going to buy, right? So we work exclusively with a media company that has moved people to town since 2020. We moved their whole company here in 2020, and then as they hire C-suite, we get them. They've had to go back to the company and request more money or go renegotiate or something like that because they accepted a position. And this is many C-suite people or many people that were hired here. They accepted a position based on the town they lived in and how much money they thought that was comparatively. They didn't do their research based on our cost of living and how that was going to be spent here. And I think that it's shocking for them. So even when we get calls from people out of town, they're like, this is our budget is $1 million. And we start to send them what they can get. And they're incredibly disappointed,
We have to start looking at like Nashville's like moving to a Chicago or a San Francisco or even a New York, and people don't see it that way. You think, oh, Nashville, Tennessee, that's cute. That's going to be affordable. And Nashville really is being priced like a tier 1 city.
We have really moved into a luxury market, very much so.
Yeah. Okay. What about like with the like short-term rentals, with like the annual permit renewals and enforcement? I mean, kind of what's going on there?
There's enough time from where Metro proposes laws, implements laws, and then those go into effect and you're grandfathered in and all of that, that developers have been really smart in kind of avoiding anything like building a building for an STR and then getting completely wiped out by it. I mean, I have a client that made $90,000 last year on his short-term rental on Music Row. So there's a way to do it in being thoughtful and being strategic in where it is. Do you manage it yourself? Because short-term rental management is 25% of your of your gross. And that's a big chunk that you could take home. So if you're a seasoned STR owner and you own in multiple markets, if you're willing to manage it on your own, have a handyman in every market, there is money to be made. If you're trying to make money, because it's the compound effect, you make this much over here, but it's really the compound effect of owning several of them in several markets. If you're just buying one or two, it's not going to be a great use of your money.
Come back to you, David. You've experienced with the short-term rental market. Everybody has a different experience. You watch one video on social media about this couple and how they quit their day jobs and, all of a sudden they make $1 million a year with short-term rentals. But David, what's your real raw experience with short-term rentals?
Like I've had a couple and hired a property management company just because I do this every day and I couldn't afford time-wise to do that. But long story short, the answer is made my money on those by buying them in 2018. And now the equity's there. So the cash flow, I'm not going to say I don't care about it. I can't micromanage it. Let's just say it's net makes a little bit of money after all the expenses, but I made the money by, buying it for $750 and now it's worth 1.4 or whatever. That's really been it. Now, so today, if I like to Meg's point, if I were to go and buy that property for 1.4 and plan to get a property management company and all that, I would probably wouldn't get the same appreciation because it's slowed down, and I would have a negative cash flow. Whereas now I have a positive cash flow, but it's not exciting. So if it was like my job is I'm trying to make money off of that property and I'm making 10 or 20 grand, I'd have to have 10 of those and make it a business and have my own handyman. To Meg's point, that makes a lot of sense. But just as a one-off, I don't think it's great to do. And it really needs to be a business. It's like, that's what I found. And then one of mine, like I ended up converting then to just a long-term rental where I got like, I don't really have to pay much, pay like a month. It's just not, I'm not paying anybody to really manage it essentially, but it's a property I lived in and I know very well. So is that kind of what you're saying, Megan? Does that kind of make sense?
Exactly. And you have investments in different markets because buyer or renters go to different markets, right? Like you have enough at the beach, but when the beach market is really slow, you have enough in the mountains, and then you have enough in a big city, so that it depends on where people are spending their money, that this might make a lot and this might not. And then next year it may flip, but you have enough in different markets that it can all kind of even out in the end.
It goes back to like 2007 when I was doing this before the real estate crash. You had the person that was, worked as an accountant or worked as a, yoga instructor or nurse somewhere, whatever. And all of a sudden now they're a real estate professional and they bought a bunch of properties with like 0% down. You could even like not only put 0% down, you could get 100, you could get like 110% financing. And then all of a sudden, it worked great until the market crashed. We know what happened there. Unless you're really a real estate professional and doing this as a true profession, it's hard to make money unless you just buy at the right time, like right before COVID, and you buy 2 properties and before everything doubles. Now you're insulated and you've got a return for the next 5 or 10 years. You can't really screw that up. It's going to take a while to screw it up. But right now, I think it's kind of pushed a lot of and probably the same thing, Meg, spec building. Let's talk about like home builders. Now, what I've seen, and you know way more than me, a couple builder clients I have, they've pivoted to more custom builds. Because like the client, they come and buy the lot for $1 million. They're carrying the financing. The builder's just doing the work and getting 20, 25%, whatever, of profit. Is that what you're seeing too? Or there's still some spec builders killing it out there?
I think it depends on your risk level, right? If you are willing to put your own capital into building, your return is going to be higher because the type of client that is willing to wait 14 to 18 months for a completed home is a very small margin. So people typically they might want to finish it out and they might want to pick their own finishes and they might want to change some walls, but there's very few people that want to start with raw land and build, have I frozen? And build up from the ground. But builders are doing that because they're scared or because they don't have the capital and they don't have the investors that they used to have.
Okay, so less risk for the builder to do a custom, but a lot of the clients don't want to wait. So they want to find a house that's like 90% their style. And then they're like, okay, I want to change out this and add some wallpaper and here. They want to do that.
Yep. So, change the appliances, move on.
Have you seen a lot of builders go under or really get pushed out of the market or?
There's a company, Red Seal. They were a big builder infill. I don't know if y'all saw this article last week, but they just sold all of their lots. It was like over 1,000 lots to Ryan Homes. And that was kind of big. Willow Branch, they were a big builder in Williamson County. Like they were pretty much responsible for like all of Canterbury down in Thompson Station. They're selling off a bunch of their last lots. And I don't know if that's because they're trying to get out of the business because somebody has inherited it or if they really are just not seeing good
returns and
a good return and a good future. And they're like, this is the way to kind of liquidate what we've got.
There's some interesting data out there from a new homes for sale perspective, just pure volume. It's getting back up close to 2007, 2008 levels of just homes available for sale. Now, that doesn't mean that just because it's a 2007, 2008 level that there's a impending crash because we've also been undersupplied for the past 15 years. But it's just interesting to note that the number of new homes for sale has drastically increased over the past 15 years.
What if that just means we're neutralized? We're hitting like more of a normal, healthy market, or if we are actually staring at, a pullback in the face. I don't know. What do you think, Meg?
Well, and I was talking to my husband about this the other day because we were, driving through our neighborhood in Brentwood and we're trying to find a house for my grandmother and to move her up here from Mississippi. And the housing prices for what you get, my husband was like, something's got to give. Like, this is wild. And I was like, but it's not giving. It's not giving 3 years later because instead of the sellers maybe coming back down to reality and putting a 2,500 square foot home that needs updates and saying, okay, maybe that is worth Y, not X. They're just saying, I'll take it off the market or I'll rent it and I'll stay. So houses aren't trading for probably what they even would if the sellers absolutely had to go. And that's where I think you're seeing a lot of the lower numbers is when sellers either do have to sell because they're moving, financially they have to sell, they're getting divorced. Like really right now, we're not seeing people move because they want to. Like that was very 21 to say like, oh, this would be very convenient to move. Like people are really going through a life moment. And that is the only reason they are moving right now. So that's where I don't know what to predict with pricing because people are just saying, if I can't get this, I'm just going to stay. And they're just real.
Well, and it's also like rates have a big thing to do with that, I think, because my rate on my house is 2.75. Where am I going to go?
Well, and your monthly payment triples, right?
Right.
Yeah. So even for $1 million home,
worth, it would triple my payment, literally.
Exactly. Yeah. A lot of like our mid to late 30s, early 40s clients, moving up to this $1.5 million price point. I mean, they're looking at a $10,000 to $15,000 mortgage. And when you say it like that, it's like, it's humbling, Yeah. You need to make $150,000 a year just to pay your mortgage like that. I think that kind of puts our numbers into perspective.
That's not even for like, you used to think about $1 million, $1.5 million house. You thought like remember the show growing up my parents watched called Dallas, where it's these big Dallas like houses with columns of oil mansions that'd be like $50 million. You're like, that's $1 million house. Looking out a window at $1 million teardown houses in Troll South. That's a little dump, and the fence is falling over there, and that's going for like $1 million too.
Yes.
Down.
Yes.
That's wild.
It's
a $10,000 mortgage, and then you're building a house, and now you got $25,000 mortgage.
Yes.
It doesn't even,
Right.
you know.
In a city that doesn't want to increase your wage enough to bear that.
So something. I guess the only thing Nashville's had going for it, the reason it hasn't imploded, is there's so many other like good things about Nashville, and the reason people are moving here that they're willing to just accept that, or they've got family money or other dynamics. Because if this was like, I grew up in Memphis, the housing market is like, honestly, a house here that's $1.5 million is still $450,000. As all the other quality of life and crime and other things, they have their own issues there, but it's affordable. It's very affordable.
Right.
But
And I think the mix of industry here, like we don't bottom out either way. You know, during COVID, when the financial industry just collapsed, New York just paused, right? Like they have a lot of foreign money in Miami. When the new law came out that foreigners buying houses had to go through A, B, and C, Miami froze. So, you know, luckily we have such a mix in our market of companies and music, healthcare, cars, you know, all of that I think there's enough to sustain us. But there has to be a point where we all look at each other and, you know, we got to come back.
Yeah. And so with the affordability being off, I mean, what are tactics that are being done to actually move deals right now? Is it, assumable loans, builder buy downs, seller credits? Like, what are the things you're seeing as like the big concessions?
Yeah. And that's where having a team behind you that knows what lender to call for this product and who to call for this builder and things like that to get you these concessions. It just depends on what your people need, right? Like, does your buyer, is he really focused on their monthly payment? Then let's work on getting a rate buy down and some credits. Are they really focused on keeping their down payment low? Then let's focus on that. So, builders are offering 6% credits right now just to get you in the door. So when you're a traditional resale seller and you're competing against new construction, you can't compete against a 6% concession on the backside, So to move houses right now, honestly, we're just being really transparent and we're trying to tell people what to expect and that it's going to be a long road. So buckle up. And here's our over communication. Here's our weekly communication. Here's our updates for showings. Here's our team. We have this group of 3 to 5 lenders that all offer different loans and different interest rates and interesting things. And then just getting transparent with sellers. It might take a minute, and that's okay.
If you're really in a situation like a life event where you're like, we've got to sell, whatever happened, lost your job, you're moving to take care of a parent, whatever, then you just have to lower the price down and you have to become the new comp, right?
Yeah, exactly. And that's where I think we're still pulling comps, but it might not even sell for that comp because that might have had one buyer and that house next door that got that comp got that one buyer, right? And so now we're entering another buyer pool. And so it's just a level of expectation, but just the transparency on the front end of saying, you might be underwater. What do you want to do? You might have to bring money to closing. What do you want to do? Or you might not make as much as you think you're going to make. Let's shift our buying power and let's shift our buying expectations to cater to that. And I think that the transparency and just giving them that information on the front end has been really, it puts an ease to them, but it's I called one of my brokers this morning. Our broker is who we call when we have a serious issue. Other than that, we can usually take care of it ourselves. And I called him about something this morning I was following up on, and I was like, how was your weekend? And brokers typically don't work on the weekends. And he was like, I have been on the phone all weekend. Sellers are having a really hard time. If their house didn't sell in a week, they went out of their listing contract. And I think it's still just a really high anxiety time in our market.
Yeah, I've been gathering that. What else? Carson? Jeri?
Yeah. Well, I'll just say So this is kind of an interesting question, and it kind of depends on if you go just a purely residential, if you're trying to go from an investment perspective. But let's say you've got $1 million that you can deploy into a piece of real estate, and maybe we, go either way. You're wanting it for personal use or investment purposes. Where do you go? Do you go in a specific part of Nashville? Do you think Nashville's just at a point right now where you can't find any good deals? Do you go outside of Nashville, north, south, Franklin, down in my neck of the woods, Murfreesboro? Where do you think is still a great place to get a good quality at a decent price home?
Yep. I personally would go to the suburbs, and I would choose suburbs that have school districts that are maybe expensive to buy into, and I would purchase rentals in those school districts. So whether it would be Sumner, Wilson, Williamson, I would choose a school district that people couldn't necessarily afford to be in, but they would move to get their children into those school zones. And I would long-term hold.
Because that demand is going to be there, because it's a family situation. It's not an ROI play. It's just like, we've got to get into school. It's May. We got to get in before the fall. Let's just go rent this place for $6,000 a month or whatever.
Exactly. Yep. And I would just grab a couple of those, because Davidson County is very oversaturated. The cost that people were buying lots at a couple of years ago is not what they're worth today, because you can't build a house on it worth what it needed to be for. And so they're still having to kind of hold at that pattern, right? And I know, David, you invest in a lot of new builds and things like that. But, a couple of years ago, when there was a huge land grab going on by builders, people were paying these premium prices for lots. Well, those are the houses hitting now that are coming out of the ground.
And the numbers, they've already have a lot in there, the profit, and they've been carrying these big notes at 10, 11, 12% if they're going to private credit to get lending. And so, it's not looking pretty.
Yeah. So prices just aren't coming down in the city. There's a lot of inventory in like Davidson County proper. And unless you're buying something in a better school zone in Davidson County or walkable in the city, again, it's got to be something different, something unique, and not run of the mill. Then getting something in a school zone where people can't afford to buy, but they can afford to rent would be my personal play.
Fun question. So what's the biggest real estate deal you've ever been on, that you've ever done?
So I have a listing right now in Franklin for 10.75.
Wow.
Mm-hmm.
That's the biggest.
On Cotton Lane.
Whoa, that's right by my house. I live in Cottonwood.
Yeah. So go right out of Cottonwood, and we're the White House on the right.
And you turn right. It's like where McNair used to live, over in that little area.
So it's the house. McNair's house was a small little cutout of 426 Cotton. Yep.
Got it.
So it's a beautiful tree surrounded by the Harpeth River. So you have tons of Harpeth River frontage. So it's beautiful.
Oh, I bet. So how many showings do you get on something like that?
Had a lot. And to David's point, every offer we've gotten has been cash. They're not financing. That price point is just, it's kind of booming. There's not a lot of inventory in that price point. We have had several offers. We just haven't been able to come to terms on them. But it's a very popular, because people want acreage. People want animals. I think there's a big hobby farm boom right now. Everybody wants the hobby cows and the donkeys and the horses and
That's fun.
Yeah, exactly. Come on over to Cotton Lane.
That's great. Well, congrats. That's a great listing.
Thank you.
Give just kind of closing up, and thank you so much for being here with us today. You're clearly great at what you do. If there's one piece of advice that you could give to somebody thinking about entering the market right now, buying or selling, what would that be?
So I think on both sides of it, if you're thinking about selling right now and you don't have to, I would try and wait to see if rates go down and if consumer sentiment goes up. So I would maybe wait until next year if you don't have to sell right now. And buyers, if you can afford and you can stomach the rates, you can stomach that price, now is the time. Sellers are finally coming to terms, and they are offering things like closing costs, and they are offering lower prices and rate buy downs. And it's really become a great time for our buyers to get some really big wins. And that's been really fun to watch, coming off of the last kind of 3 years where buyers, didn't really have a choice.
It's got to be on the buy side, like you said, if you can afford it, because I feel like 2 or 3 years ago when rates started going up, on one hand, we always heard, oh, just buy it now, you can refinance later. Well, it's later now and rates still haven't come down. So if you can afford it, you can afford to have the rate. Realize we should be at the top end of it, but be prepared to make these payments for longer than you might anticipate, knowing it might just be a slow trickle before rates end up coming down.
Right. There was a big marry the house, date the rate. Did you guys hear that phrase? I personally never said that because I don't have a crystal 8 ball. I would be in Fiji if I did. But a lot of buyers, there's like a big articles right now about buyers that were kind of followed that, marry the house, date the rate. And now they're having a really hard time making their payment. So I would not suggest that. That is never where we want to be. But if you can do it, you're going to get a great deal.
You think rates are going to come down this year? Mortgage rates. And I mean, I know that's a crystal ball question. I'm just curious, like what you're hearing. We hear stuff about the Fed lowering rates and all that, but like in your world, are you hearing like mortgage rates at the end of this year? Do you think they'll be 5.75 or still 6.75 or whatever they are now?
I think, and not to get political, I think that if we can start being honest with ourselves that the economy is not as great as these numbers keep coming back saying it is, then rates should go down.
Yeah, I don't disagree with that at all.
Because the economy is just not as great as the numbers turn out every month.
Stock market and real estate market, politics and policies do matter, but you can take the person out of it. Doesn't matter.
Yeah. The person has nothing to do with it. It's all about being transparent. And, if job numbers aren't as good as we think they are, then let's adjust it.
I agree. I think something's going to have to give hopefully soon. And that'll be the next shakeup with the stock market and the real estate market, probably with rates. Thank you so much. Keep fighting the good fight out there.
I always love seeing you guys. Thanks for the invite.
Yeah, you got it. Awesome. Thanks everybody for joining us on the Retire While You Work podcast. And we'll
hundreds of millions of people listening today. Thank you so much.
Come by 426 Cotton Lane. Yeah.
Come on, Cotton Lane. She'll sell to you for 10. She'll give you 100,000 off, 10-6.
Right. I hope my sellers aren't listening to it. So yes. Thanks, you guys.
All right, see you.
Bye.
Any opinions are those of myself and not necessarily those of Raymond James. Expressions of opinion are as of this date and are subject to change without notice. The information contained in these podcasts do not purport to be a complete description of the securities market or developments referred to in this material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Every investor situation is unique, and you should consider your investment goals, risk tolerance, and time horizon before making any investment. Prior to making an investment decision, please consult with your financial advisor about your individual situation. Any hypothetical examples are for illustration purposes only. Actual investor results will vary. Raymond James does not provide legal or tax services. Please discuss these matters with the appropriate professional.